Welcome to the Recon Trader. In today's video, I will share with you my new price targets for Bitcoin and Ethereum after this most recent crypto market dump. Now, it's important to note that making money in the crypto market is not about picking tops or bottoms, but in reality, the objective is to be involved in the battle at levels that expose you to minimum risk relative to the perceived profit potential. So the following price targets, both high and low, will be based on technical analysis. So let's get to it. Now, the first chart we will look at will be Bitcoin USDT on the 1-day time frame. Now, in the previous video, we were looking at around this range here after Bitcoin had come up and retested the 59.5 level and got rejected. And if we jump back over to the video, you can see we had the resistance at 59.5. And we had two support levels set up around 47,000 and 43,000 back here. In addition to, we had a trend line where Bitcoin was basically consolidating between resistance and this trend line. We were looking for the price action to at least maintain this trend line, and if it didn't maintain the trend line and broke down, then we would be looking to get short. Also, I was concerned about the fact that we were setting higher highs, but the RSI was setting up bearish divergence as it was getting lower with each high. And that trend line sloping down is what is considered bearish divergence. And so after that quick recap, we can jump to today's chart. We can see that the trend line did hold on the candle we were watching. And on the following day, we actually started to see some momentum up. However, yesterday's news out of Tesla and the CPI or Consumer Price Index numbers shocked the actual stock markets. We ended up seeing blood in the streets and at the same time breached this trend line. And at that point, if you got short, you could have made a killing. And the carnage did actually halt on this longer trend line from 43,000 right back to the touch of our other prior support of around 47,000. The price actually halted right in this area above this longer trend line. However, today we did breach this trend line and we dipped all the way down to 46,000. So now the question is, where do we go from here? Well, for starters, the price can continue down, and my next level of support besides the 47 and 46,000 is going to be 43,000. If we breach 43,000, there is a whole lot of open air down below. And at that point, we'd probably be looking at maybe around somewhere in the 41,000 area to act as previous resistance to become support. However, I think if we break 43,000, there could be a lot more blood in the streets. So for now, my lower level targets are 47 to 46,000 and 43,000. Now for my upper level targets, I'll drop in the trend-based Fibonacci extension tool. And so in reality, we may see quite a bit of resistance at the 382, the 618 Fibonacci levels. Obviously, the main level of resistance is going to be back up here around 59.5. And until we can actually breach 59.5, we're more than likely not going higher. So right now, what I'm really looking at is to get back above this 382 level, which is 54,000. The next step would be where we started this sell-off, and that would be where this candle actually rejected at, which was the 618 level, almost to the dollar, and that is right at 58,000. So for now, I'm looking at 54,000. And then the next step would be 58,000, and you can see there's a lot of resistance at that 58,000 level. And then right above it is the 59 to 60,000 level. So 54,000, 58,000, and then probably 60,000 are going to be my next targets for Bitcoin if it can recover and start to move back up. Now, with that being said, I want to stress this sell-off is due to a lot of news, and some of that news is actually positive for Bitcoin, even though it was negative for the markets. Rising inflation, for example, is actually good for Bitcoin. It solves that problem. It's bad for the markets, and we saw the markets sell off because of that news. However, when the markets sell off, it can pull down other assets, and in this case, it pulled down the crypto market. Obviously, the Tesla decision was not good for Bitcoin, so we will have to see what kind of weight that puts on Bitcoin over the following few days. So with that all being said, let's jump over to the Ethereum chart and take a look at what we might see out of ETH. If we jump back to the video I did over a week ago on ETH had just hit a new all-time high, and we had dropped in the Fibonacci tool to check out possible price targets on the way up and, of course, on the way down. And it was this candle that set the new high, and this was the day we were actually looking at the chart and mapping out the possible all-time new high right up into the 1618 level at 43.66. And at the time, obviously, we didn't know the future of these candles. We were looking at the 1272 of around 3900 to become resistance before the next move up. And after the price action took a little bit of a rest, it did break out right into that 1272 level, which actually became resistance and then support. And after resting for a couple more days, ETH broke right up, and the wick of this red candle hit the 1618 level almost to the dollar, and then pulled back on the overall market news with the inflation worries, and then obviously the whole Bitcoin and Tesla issue, and we've been selling off for the last day and a half. And as you can see, I dropped in a couple trend lines, and ETH was doing a pretty good job of holding above this lower trend line. It was actually coming back and touching. This wick on this candle touches. We get a touch again on the wick of this candle. This candle's wick almost comes in and touches. Unfortunately, this wick on this candle did breach it, and we obviously saw the sell-off. Now, another level that I'm very interested in is the 9 EMA, and the price was respecting that 9 EMA. And in reality, I'm okay with the price pulling back into the 9 EMA. A lot of times it's not uncommon for that to happen, and then if it can hold that line, we can see the price action move back up. Now, as far as today's price action goes, if we do close below that 9 EMA, that would be bearish. I would start looking at support where the wick of this candle actually comes right back into 3,500 to the dollar, which is prior resistance, which is now acting as support. So the first level I'd be looking at on ETH is going to be 3,500 on the way down. The next level down would be the Fibonacci 786, where we saw support again right around the $3,200 level. So we go 3,500 down to 3,200. A break of this level would put us right at the 618, which would be 3,000. And so those would be my three targets on the lower level, 35, 32, and 3,000. Now, this candle still has 4 hours to go before it closes. If we can close back up in this channel, then there could be a possibility of coming back to the all-time high, and that would be at 43.72, which was the high of this candle. And I would expect this level to act as resistance for at least a short period of time. If the price is able to breach this level, the next level I have is psychological, and that's 5,000. So if the crypto market can get over the FUD, fear, uncertainty, and doubt, we could see 5,000 in the near future for Ethereum. And that pretty much wraps it up. I just wanted to give you some insight into the target levels that I'm looking at based on technical analysis after this most recent sell-off. So I will be doing update videos in the near future, so it'd be a good idea to shoot that subscribe button. Also, if you like this video, do me a favor, spike a like. If you have questions or comments, leave those in the comment section down below. And remember, never send your money into battle without first doing your recon. See you in the next video.